Hey everybody, welcome to another edition of Midas Letter Daily. I'm here with my good friend and co-host, Mr. Special Ed Milewski. Edward, how are you?
James, I'm great.
Yeah, you look a little...
I feel better this week than I did last week. Last week I was thinking it was coming to the end, you know?
Brain dead?
Just...
Oxygen starved in the upstairs department?
You know, who knows? Who knows, right?
Just old age.
One of us is, we're going to go sooner or later.
We're all going to the same place.
I see you got some nice geese in the yard.
Yes, we have 4 Toulouse geese.
Toulouse?
They are French. Can't you tell by their attitude?
Oh,
they hate you just because you are not French.
So we're having some pate this afternoon.
Well, we might have some foie gras if they don't improve their attitudes a little bit. Did you notice the 2 peacocks?
Yes, beautiful.
Actually, 1 peacock,
beautiful.
1 peahen. Yes.
Yeah.
Nothing to do with our show, markets, economics,
yeah.
Monetary system, financial system, or any of that. Well, let's go to some audience questions. Okay, so Steve Marsh wants to know, do you think Musk wants to run for president and needs a platform to aid that goal? Well, that's a really interesting idea, Steve. Whoever thought? Yeah. I wonder if Musk actually considers himself presidential material.
Do you think that if that happens, then our boy Trump will want to get back into the Twitter realm, and they can have some interesting, discussions?
Trump and Elon Musk?
Yeah.
I don't think they speak the same language.
They're pretty good buddies.
No.
I think so.
I doubt it.
Well,
if that was the case, then that would really be very a revelation about Elon Musk's actual cerebral.
Well, I don't know. I'm not saying they agree politically. I'm not saying that. I'm saying that they talk.
Really?
I think so, yeah.
I see. Okay, so yeah, good question, Steve, but we don't have an answer to that, but that's a great thought. And if that does materialize, we shall forever remember your name as the guy who first predicted that. So, make a note of that. Zach wants to know, how big of an impact would sales by Musk have to purchase Twitter on the Tesla share price? Now, there's a good question as well. Like, to what extent is the weakness in Tesla's share price in the last few sessions related to?
Well, today at one point, right off the bat, the market was strong, and Tesla shares just dropped dramatically because yesterday, I believe, Elon said, I'm going to go through with this. Because he saw the quarterly results, he's going to do it. So that means there's some perceived pressure on Tesla.
Well, look at that. And today it's in recovery mode along with the rest of the markets. Okay, so how big of an impact? A mild impact. Mitchell Scott wants to know, isn't it risky for Fidelity now allowing investors to add Bitcoin to their 401k accounts? Risky for Fidelity. Mitchell Scott, I would say that you are correct there. That is a risk for Fidelity because aren't they opening themselves up to our litigation in the future if Bitcoin were to collapse and it would be viewed as a lack of proper supervision of the retail accounts under their control?
You know, this is just another one of those areas that cause mass confusion to everything else. In other words, there's so many of these crazy little sidebars about there's crypto, there's this, there's that, there's Russia, all these things makes me think that maybe all this largesse that's taken place over the last 50, 60 has to get wiped out before we have to start fresh.
And how does that
like
apply
a mass
to
extinction
in Bitcoin?
No, I don't know. no. It applies because maybe this is going to cause problems. I still think there's a genuine chance that Bitcoin could collapse.
Well, this is bullish for Bitcoin.
That's bullish for Bitcoin, absolutely.
If you can buy Bitcoin in your 401k now, well, guess where the demand is coming from in the Bitcoin space today?
RRSP?
This could be a big move.
RRSP?
Well, your 401k.
What are you doing with your RRSP?
Anyway, so Brett Hall wants to know, do you agree with Cathie Wood saying the Fed won't hike as much as the market is priced in? Brett Hall, I do kind of agree with that. I think the Fed, and we've always said this, that the Fed is jawboning aggression while acting in a very passive manner.
Bah.
Bah.
Yeah.
We are
not as.
Yeah.
I don't hear that.
We're wolves, Ed.
Bah. 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 Sheeple. Hey, listen to the sheeple. Listen.
Yeah, Cathie Wood.
I think she might be right.
I think she's right. Yeah. Okay, Sticky Stocks wants to know.
Sticky Stocks.
What's next for the stock market as investors grapple with Fed near peak hawkishness? Near peak hawkishness.
Well, there you go.
Perspective there.
Yeah, peak hawkishness, peak inflation.
Yeah, that's what we are bears.
So maybe the stock market may have a little run here.
Well,
because,
we're seeing it right now.
Well, it's up big today. And remember, when you say things like the worst month for the NASDAQ in 14 years, maybe that is the dagger hitting the ground, and now you can go pick it up.
Huh. What if it's all steel dagger and it bounces and you catch it on the fly, but you grab it?
What if you get it in the eye?
Or in the heart?
Oh, hardy har.
George Hunter wants to know, how do you invest with inflation and higher interest rates? Well, George, the knee-jerk reaction from my side of the table is gold, and gold. But not
and silver, poor man's gold.
When I say gold, I mean precious metals.
Oh.
But gold, silver,
but why wouldn't you say
palladium?
Yeah.
Though platinum and palladium are more industrially used, not so much used as investment.
Platinum, though, was always a platinum, like a platinum jewel ring. You know?
But so because we're going into this, well, let's see what happens. Now we're in this environment where the Fed has been transmitting hawkishness but acting dovish. And if they
they haven't started reducing the balance sheet.
If they go full dove because of the recession that's now underway.
What the hell would full dove be in another?
Full dove would be double down instead of pulling back on the 90 billion a month. Let's go for $300 trillion a month in fresh stimulus.
Woo! I'm stimulated.
You haven't seen anything yet.
All right.
Like, could you imagine? Yeah, George Hunter. Okay, so we hope we answered that for you, George. But yeah, gold, and if we're going into this marketplace where the Fed is going to follow through on its hawkish statements, then gold and the companies that mine and secondarily explore for should be the beneficiaries of increased interest, taking their prices higher. Though we live in an era where a lot of that interest has been diverted into the cryptocurrency segment, so maybe not.
But you know, James, the interest rate thing has caused the U.S. dollar to be the index to be the highest level in 5 years.
Well,
hard to have gold follow that up. Just like in 2008, there was a lag. There's a lag.
Why is the U.S. dollar index at all-time highs?
Because of interest rates.
Right. So now you get how much value? You get like 2 points on your money.
2.
Like, let's go back to the USD. It's like
I'd rather take my chance on the lotto tonight.
Tokyo Rose was a famous propagandist that worked for the Japanese during World War II. Or was it the Korean War? I can't remember now. I could be mistaken. Pardon me for being senile. Anyways, I often liken the statements of the Fed to Tokyo Rose. It's like she says anything just to get you to act in a certain way and try to get you to give up and just go along the market and like, holy
In other words, let's get down to business here.
Yeah. So George Hunter, I say go gold and miners if the Fed remains hawkish, but if they go full dove and reverse course, then I would say buy gold and miners.
Right.
Essentially, tech stocks are going to be the beneficiary of a reversal if they go back to full dove, but we'll see. Alfie T wants to know, thoughts on Jim Cramer and his inability to get a stock pick correct. Well, Alfie T, I'd say...
he gets some correct.
Does he?
I think so. Sure he does. Sure he is. He's got, listen, he's hot. He almost has an opinion on every stock in the universe.
Does he?
How can you do that?
I have no idea.
Anyway.
I don't follow Jim Cramer, and I don't really... So I don't have a sort of connotation of his stock picking ability.
Well, one final comment. You know, when so many people have made so much money because Apple and Amazon and Microsoft, these companies are core holdings for many Americans and other citizens of the world. If that reverses, which it looked like it may have, we are now pointing south. That wealth effect is going to become negative, and that'll bring on a recession. You know, if people see all their money disappearing, they don't go out and spend money. They only spend it on the way up.
Yeah.
You know what I'm trying to say?
Yeah. Thanks for writing in. Please continue to do so. We really enjoy your comments, and especially when they're so relevant. What a relevant bunch of comments this week, and some great some great speculation. We'll be pulling up those comments when those events come to pass, if they do so.
Banter.
Banter away, boys.
Banter. The banter boys.
If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. NuRAN Wireless. Now, this is a company that people have been scratching their heads over for quite some time because they keep announcing these deals for more towers. They're a wireless company that builds towers powered by solar power in remote areas, right now mostly Africa, but they're working on deals in Latin America. And yesterday they came out with an incredible announcement, and so I decided to get Francis Letourneau back on the show to describe that. And so we're going to start with that interview because this is transformational for this company.
Big stuff for if they execute, it's
going to be crazy,
monstrous.
So let's hear what Francis has to say.
Okay.
Francis Letourneau is back. He's the CEO of NuRAN Wireless. Francis, welcome back.
Thank you, James. What a nice day for us now.
I'm a little bit flabbergasted by this press release. It seems quite incredible. Selected by a Tier 1 mobile operator for RFP for thousands of mobile sites in the Middle East and Africa. Now, I'm guessing by the headline, rather, that you're not in a position to name the Tier 1 provider at this point.
No, that's the reason why it was not disclosed here. The disclosing of this MNO will be done once the global framework agreement will be signed by both parties. So they wanted us to wait until then. But it's a massive news for NuRAN, of course.
So when do you see this sort of project starting?
So it has already started. We had a pre-kickoff meeting last week to set the tone of what it's going to be. We are sitting with the group in order to establish how we're going to play. That one introduced to the different subsidiaries and then deal with the number of sites in terms of commitment. But we're tapping into a fantastic buffet of thousands of sites. So we expect this entire numbers to be in the range of maybe 20,000. And if we get, I don't know, 1/3, or 25% of this would be quite an achievement for us. We now have 2,600 sites under contract, and if we're able to get like 1/3 of the 20,000 site, we will be extremely close to our 5-year objective of having 10,000 sites in our portfolio.
So what are the immediate implications in terms of revenue for the company?
In terms of revenue on that one, I think we will see revenues kicking in from those contracts probably end of 2022. I don't see anything happening sooner than that because first it will take a couple of weeks to get the global framework agreement signed. Then we will need to finalize our service agreement with the different subsidiaries. And based on that afterwards, of course, there's a set of actions that needs to happen within the next couple of months, and which type approval, getting our equipment approved to get into country, getting the export license from Export Canada. So we'll take maybe 2 to 3 months just to set our operation for those subsidiaries or those countries. And once it's set, it takes like 4 to 6 months to get the first site live, installing the VSAT infrastructure, installing our infrastructure, hiring people. So it will take a couple of months until we get there. But I think 2021 we might be able to see some of these sites in many countries with this mobile network operator.
What about the CapEx for this project? Are you going to have to raise more money for this, or is financing part of this package?
We will need potentially to invest in terms of capital expenditure for this close to $200 million US. This is based on our expectation on the number of sites that we might have to sign. Part of this will be covered by equity. Most of the financing that we will be raising will be done at the African holding structure. We have created this, will be based in Mauritius. Incorporation has been completed, so we're ready to go now and bring additional money there. As you know, we have announced two DFI financing at the beginning of 2022. Which will likely to be completed in the next 2 months. And the drawdown is planned across, I would say, between end of June and beginning of July. This is our expectation as we speak. But the same type of play is going to start. We are kicking off a Wave 2 financing debt package that will need to come along with equity as well. The equity to debt ratio for this African holding structure will be something around 25-75 or 30-70. But as a private, at the private level, we see much higher valuation being executed for the equity raise. We are talking to a lot of players. The Wave 2 is going to bring probably 30 to 40 million, and the 200 million actually that I'm talking about will not need to be all raised from debt or equity. A good portion of it will be self-funded from the cash generated by operation, actually, which is interesting. As we already discussed, it will be generating a lot of revenue. EBITDA is above 50%. So those operations will be generating a lot of cash. If you just take 10,000 sites, as I told you, 10,000 site running, we would be generating $250 million in revenue and 125 million in EBITDA. So the cash generated at the bottom will be reinvested. So our belief is that we will probably need to raise 150 million total for 10,000 site, and the rest will be self-financed by the operation. That was the point, but we'll probably do an extensive video on the earnings, the financing, and everything with our CFO that will set the table to have a better understanding of the financial play of that business.
So I guess with a tier 1 global provider as your partner, financing was not going to be a problem on the debt side and probably not on the equity side either. So just for clarity's sake, this is essentially a non-dilutive deal to the publicly traded company in Canada.
This is what we are trying to do with the African holding structure, bringing all the equity and the debt at this level. Of course, there's pledge on assets. There's a lot of not much security, but everything needs to sit within the African holding structure because most of the lenders wants to invest into an African entity. So they cannot finance the corporate level. So it has to be raised there. So yes, it becomes non-dilutive for the Canadian and North American shareholder.
How will this affect the ownership overall of the African subsidiary?
The plan is now to bring 20 million as a first tranche in the upcoming months. 20 million and 6 will be used to ignite the drawdown of the DFIs. It's not by the way, the 24 million US that we have raised thus far is not subject to getting equity. The drawdown is subject, so it's already approved or going through due diligence. So we're bringing all this there. With 2,600 sites under contract, we were valuing the company at 200 million. And we were trying to raise 20 million. So the debate and the discussion right now is on the valuation side, whereas 20 million will probably account for 10% of the company. If we need to raise more, but then we will see how it plays out. But the signature of this plus all the follow-on contracts that will come, of course, will pile on top of the 2,600 site, and that might raise the company valuation as well. So we might be able to raise more capital or to get the lower valuation for the 20 million if we get to that point. So it's a fantastic negotiation asset for us now with this selection that we just announced this morning.
By those metrics, if you valued the company with 2,600 sites at 200 million, then with an additional 20,000 sites, that implies essentially a $2 billion valuation for the subsidiary.
Yeah, if we go to 20,000 sites, I doubt that we will be there, but let's say we get 1/3 of those 20,000 sites. It just implies that we will be really close to our 10,000 site focus or target. But the valuation is close to what 1 billion, 1.2 billion now. So it's a fantastic business, and of course, as you know, the social aspect of what we do is also great. So on the ESG side, we tick a lot of boxes, and it's the reason why we are able to discuss with all of those development financial institutions that have, in terms of mandate, to invest in infrastructure in emerging market. So we're tapping into all of those boxes right now.
You bet. Well, congratulations on that. We're going to leave it there for now and come back to you when we have the financial conversation after the next financials. Really appreciate your time as usual, Francis, and continued best of luck.
Thank you very much, James. Have a good day.
All right, so here's the chart on NuRAN, and as you can see, it's been sort of slowly drifting. This press release obviously had a bit of an impact, as here's the lift. Now, as Francis said, this implies a valuation approaching at least $1.2 billion if they only execute on 1/3 of the sites in that contract. If they were to execute on all of them, that would imply a valuation of $2.2 billion of their African subsidiary. And, and here's this stock, got 40 million shares out, trading at $1. It's got a valuation of $40 million. So there's a huge disconnect here.
Yeah, maybe people can't get their head around how they're going to finance this. Well,
and the problem is it's on the CSE in many respects. Because
really?
The CSE...
The Cowboy Stock Exchange.
Well, how many billion-dollar companies are there on the CSE
on
today?
The Cowboy.
Well, Cowboy, or the Cannabis Exchange, as it used to be known.
Yeah.
But, so this is where the great disconnect is. But I can't stress highly enough...
Pay attention.
They have to disclose that we have an option on 250,000 shares in this company at $1.70. So we're way out of the money.
Right.
And yet we continue to support this company at our cost because the cash component of the contract is now over. So, we're obviously biased and obviously conflicted. But that being said, the reason I put myself in these positions is because I truly believe that this company is going to be a lot more valuable at some point than it is today, and it's just a matter of time till the market figures it out.
Yeah, well, if they start rolling out these towers and people need this product, they need the service.
Precisely. Also, next up, we have a gentleman who was formerly the head of supply chain logistics at Tesla's Gigaplant in Nevada when it first opened. Dr. David Deak joins us now. He is a materials scientist extraordinaire, and he is deeply involved in the direct lithium extraction industry, as he is about to tell us. Let's listen to that story. Dr. David Deak joins me now. He's the president of Marbex, LLC. Dr. Deak, welcome back.
Thank you. A real pleasure to be speaking with you again.
You bet. It has been a number of years. And David, there's so many things I would love to run by you because you've done so much in the battery metal space, starting with the battery supply chain role at Tesla's Gigaplant originally, and then with Lithium Americas. You've really sort of had your foot everywhere. But what I've been focusing on lately is this emerging importance of direct lithium extraction technologies to the lithium supply chain equation, because it seems that Chile's not going to allow solar evaporation ponds on any scale anymore, nor is Argentina. And the direct lithium extraction technologies seem to be sort of the holy grail of lithium extraction and product purification. So in your view, where does direct lithium extraction sit in the future supply chain of lithium relative to spodumene hard rock extraction or traditional solar evaporation from Solaris?
Right. So I would say that moving forward, there's not going to be a lot of opportunity for the evaporation pond process to capture more market share, I would say. And so that really brings a lot of focus into, brines and hard rocks, as well as sedimentary materials, will be resources to be developed and advanced to increase the supply of lithium. For brine resources, direct lithium extraction will play an absolutely vital role to not only enabling traditional type of brine resources, for example, from salars in South America, but also it can be used to unlock resources that are traditionally considered, non-commercial. So, for example, geothermal brines, sort of petro brines, and oil field brines. These are types of resources that, in the conventional sense, are considered low grade. And more difficult to develop, but with the right kind of extraction approach, these can be, very cost competitive resources.
Mm-hmm. And so, from your perspective, who are the leading sort of developers of direct lithium extractions that are closest to actual commercial production?
Right. So what I would say is, in the direct lithium extraction space, you have different approaches being pursued. And you have, I would characterize them in sort of three technological platforms, basically. One would be using membrane types of technology, where the whole idea is to basically filter through brines through membranes, where those membranes exclusively or selectively allow lithium through and reject impurities. And then you have another type of platform, which is based on ion exchange. And that can come in the form of either ion exchange resins, or it could also be solvent extraction as well. And then you have a third category made from sorbents, where the whole idea there is that you have sorbent resin that selectively absorbs lithium and can desorb lithium without the use of reagents like you do with ion exchange. So those three sort of platforms, all three may have a place in the lithium extraction space or the lithium processing space. But I would really say for the lithium extraction space, sorbents are the future of direct lithium extraction. And I say that because sorbents, they're commercial today. Livent, for example, uses a sorbent in Argentina in their sort of hybrid DLE pond system, and the benefits of a sorbent are that you don't use reagents. You can have resins that have a very long lifetime, and the other advantages as well is that it's commercially developed and it can be enhanced basically from what's been commercially developed today. For a direct lithium extraction approach, there are basically two things that you want out of a direct lithium extraction unit. One would be to concentrate your lithium. The other would be to reject impurities. And out of those three categories, ion exchange and sorbents are the ones for which you can do both things efficiently. But ion exchange systems require a lot of reagents and a lot of, for every mole of lithium that you want to get out of the system and extract out of a brine, you need a mole of acid and a mole of base as a minimum. And that does draw down on cost and complexity when you want to build an extraction unit with ion exchange. So that's sort of my sort of outlook. The membrane technology, I think, would be very useful in applications where you're going to have, an electrolysis process, because membranes are, while they might be good at rejecting impurities and effectively purifying lithium, it usually comes at the cost of diluting lithium if you're trying to pass the lithium through that membrane. So you need to concentrate that lithium.
Right.
So that without calling out certain companies and names, I would say there's a particular platform approach that could be taken, that could be leveraged in the direct lithium extraction space. The other thing I would mention as well is that when it comes to selecting, a resource developer who wants to select the right extraction approach, I would direct them down a road for which you look for minimal complexities and costs, which means minimal use of reagents, but also really look at what's the water footprint and the reliability of an extraction system, and also lifetime as well. You really want to sort of abuse test a process so that you make sure that it can survive a lot of conditions in as it operates over what will be decades.
Sure. So Tesla, for example, has just sort of rolled out its 4680 battery, which is essentially a tabless configuration. And, so Tesla is obviously invested in pursuing refined battery chemistries that reduce the risk of flammability, for one thing, increase power density, and also reduce the reliance on the more expensive and less reliable supplied metals like cobalt. So from where you sit, do you see that lithium-ion batteries' dominance in the automotive vehicle space is in any way threatened through the sort of surrounding emerging alternative battery technologies that don't use lithium?
The short answer is no. It's pretty difficult to escape lithium as the ideal sort of charge carrier in a battery for mobile applications. And the reason why is because lithium is not only the lightest metal on the periodic table, it also, when you couple it with other elements to make a battery, you have what's called you get the highest electrochemical potential out of lithium compared to any other element. So that basically means that you can have the highest voltage and hence highest energy capacity using lithium versus any other elements in the periodic table. So when it comes to stationary storage, on the other hand, where weight and size may not be such a critical factor, then that's where you can see alternatives to lithium ion technology blossoming.
Sure. And on the supply side for lithium, in 2021, there was 400,000 roughly tons produced, and yet the demand is approaching 2 million tons annually, 5 million tons by 2025 or 2030, depending on who you listen to. But at any rate, the clear disconnect between the supply and demand equation is that there doesn't appear to be enough lithium even under development now to satisfy the demand going out 10 years. So how is that going to impact the ability of electric vehicle manufacturers to meet their own targets?
Yeah, I do see lithium being it is a critical bottleneck in the supply chain. And it will take time to debottleneck, lithium supply. That is also where I see, DLE technology coupled with, new types of brine resources filling that gap. So when you look at a lot of analyst projections on supply, especially those that understand that there is a gap between supply versus the oncoming demand, it will be unconventional resources that are potentially not even captured in that in a lot of that analysis that ends up sort of filling the gap. It's not entirely. It may not be entirely clear from a lot of vantage points where and how the these resources will be developed. I mean, I have a pretty good idea in the sense that I think there's a handful of North American resources, brine resources, again, very unconventional, that sit to, there's a lot of potential there to develop such resources with the right sort of technology platform.
David, we're going to leave it there for now. That's pretty much our time limit. I really appreciate your input today, and we'll come back to you in due course and have a follow-up conversation. Thanks for your time today.
Absolutely. Really enjoyed it.
You bet. Bye for now. Now, normally we cut to a chart after that, but the company he's referring to is still private, and he pretty much intimated that he didn't want the name disclosed at this point, so we're going to honor that. But we will be keeping close to the story, and as soon as it starts to head for a go public strategy, we will be there. Won't we, Edward?
Yeah, we'll be there.
We'll be there all day long.
We'll be there
come home.
Until we're not.
Okay, Ed, let's talk about inflation.
Yeah.
We're going to start with a look at
look at what's going on in Japan here. With the currency. I mean, if they're saying, hey, we don't care what happens to the Japanese currency.
They're not going to defend it.
They're not going to defend it.
Right. Well,
that's inflationary, isn't it, for people in Japan?
The Prime Minister has politicized monetary policy in Japan by signaling to the central bank manager that he wants to maintain stimulus at the current rate and interest rates below zero, or at zero, near zero, depends.
He might be right.
Well, I mean, if that's what they're doing, that's why the yen is in free fall. But look at even our friend Dr. Copper here has started to weaken, down to 443, down from a high of 480 in the last couple of weeks.
Well, it hit 5.
Yeah. Why do you think copper's weakening?
Well, I think that so much has happened so quickly that maybe, just maybe, the slowdown can happen just as quickly. And
so you don't think that the weakness in the copper price is indicative of an expectation for slower economic growth globally?
Well, I think that's what it is.
Right.
And in other words, why, things have slowed down a bit. I mean, they came out with a number today.
Yeah.
GDP was supposed to be an increase of 1.1%.
Was the expectation?
That was the expectation. It came in minus 1.4. Red.
U.S.
A red
quarterly.
number. Quarter over quarter.
Right. Wow.
And last quarter was 6.9.
So
up. This quarter down 1. In other words, whoa, the brakes are on.
So this is
the brakes
an economic
are on.
Contraction. This is, I mean, how many quarters until
inflation. Next thing you know, depression.
Well, what are the numbers where it indicates a recession?
Is it two quarters of negative? I don't know. You know what? They have a formula.
Okay, well,
suffice it to say.
Let's look it up here. Working definition of a recession is 2 consecutive quarters of negative economic growth.
Well, we just got one.
33 to turn economic growth, Edward.
I'm pulling my hair out.
Yeah, okay, so that's one quarter under the belt. One more quarter of negative economic growth, and the U.S. is officially in recession.
So a couple of things. They said that this looks like April could be the worst month for the NASDAQ since 2008. And you know what? 2008 was when their shit really hit the fan with the financial system. And here we are on NASDAQ, just as bad as back then. That's 14 years ago. And apparently Microsoft is having the worst month since. Now, they just came out with their earnings and they were still pretty good. So the stock had a bump. Yeah. But there's been a lot of damage. Like there's stocks down there, like some of these stocks related to like Zoom and DocuSign and some of these things. Might be having trouble getting through here,
Right. Bit of resistance.
Well, you never know. It could get through, but it's been beat up.
Look at this day. NASDAQ's up 2.3% practically today.
Yeah.
Dow Jones up 1.65. S&P up 2.2.
Apple's tonight, and so is Amazon. Those are the two biggies.
Well, actually, that's last night.
Well, depending on what time you watch this.
Okay, so here's here's my Bitcoin bet. So just to refresh, now that the audience was requesting some trading strategy, and so I did some research, and I found a trading strategy I could wrap my head around, and that trading strategy is...
Can you say it?
When the bar crosses through the exponential moving average divided by the simple moving average, that's a buy signal. And it is reflected on TradingView, as the platform I use, in this line. This is the EMA.
That's the line you want to get through.
Yeah.
And
so
you got through it.
When this bar closed above the SMA, that was my signal. The next bar was my confirmation. So this is where I bought, because I look for confirmation on strength in the volume. So this was an unequivocal buy signal according to my strategy.
No doubt about it. There's no dubious.
No
well,
whatsoever.
maybe I should short it. Maybe.
Yeah.
This is go in there, buy it.
So right now, as of right now, the trade is good. Now the problem with this trade and this strategy is that as soon as the EMA is breached to the downside by any of these bars, I'm expected to sell.
Put a stop loss in.
Well, what stop loss? Well, I only put $5,000 on the trade.
Oh, big shooter!
Well, because this is my first time trading Bitcoin.
First foray.
This is the first time I bought Bitcoin.
And you bought it. Can you imagine?
Recognition of this? The dinosaurs have come home to roost.
Were you saying at 30,000 it was falling off the table?
Well, it was.
Yeah, well,
back then.
Yeah, now it's moved up.
Well, this is the great thing about markets.
I know.
What you say yesterday has no relevance today.
You're right. You're 100% right.
And I said that I would never be a long-term believer in Bitcoin.
You're just trading.
I'm just trading for fun. But, if I find this trading pattern that works, and the idea is, the target is, as soon as I see 5% growth, that's the end of the trade. I can pull my money, but I'm not going to pull my money until I see that the bars go red and go back through the SMA or the EMA to the downside.
Right.
So, basically, if I see 5%, which, let's see, since I bought that bar, so there we're up 1.3%, so another 3.5%. So basically up here at 41 is the sale, and I lock in a 5% win and redeploy the next time it dips.
Redeploy. A little extra, too, because you'll have an extra 5% to work with.
I'm going to buy myself a little shot of something.
Wow.
Yeah. So there you have it. That's
redeploy and a shot of tequila.
Redeploying a shot of tequila. Ooh, maybe a smart doobie to go with it.
Woohoo!
Okay, so that's our Bitcoin trade, which is working out. Wouldn't it be a miracle if these two old dinosaurs here, that's you and me, actually started cranking up our...
That would be a miracle. In fact, they'd probably write a new book called The New Bible.
The SEC would come sniffing around and go, what are you guys doing manipulating that Bitcoin price now?
With $5,000 no less.
$5,000 in the trade.
Well, I see it's up to $5,300.
Yeah. Take your money and go!
Have you declared this on your tax return?
That's right.
Jesus.
The CRA, the SEC, the TSX are all going to be banging on the door saying, what are you guys doing?
Now the saber rattling out of Moscow seems to be getting...
well, let's go see what the WSJ has to say about that.
And, he's cut off gas supplies to Bulgaria and Poland.
Yeah, there's the front page of the Wall Street Journal right here for everybody to look at. There's the... Turkey tree and a turd! No, not turkey tree and a turd. It's 1.5%. Weakest economic growth quarter since 2020.
Jesus. I need a drink.
I need a drink of
I know.
Jameson's.
Well, but anyway, that's a pretty sharp drop from 6.9 increase last quarter.
Oh,
look at that increase back there.
Yeah.
Big boy.
Fake news. Fake news. Fake news. Anyways.
Wow.
That's out of control.
Yeah.
Okay, so how'd you like to be having COVID in China right now? Like, basically, they put up...
ban on cigarettes. Jesus.
That's on menthol cigarettes.
Oh, yeah.
But in China, if you live in a building where COVID is, they just put a fence around your whole building. You can't go out. Nobody can bring you food. It's like, well, if you live through this, congratulations.
I don't understand. They don't mind you starving to death, but they don't want you having COVID to death.
Yeah. So what is wrong with that? Why don't they just say, you know what? 30% of the Chinese population report to the vaporization booth. Like,
what I want to know is, I want to know if in a year from now the population of China, there's some interesting theories about demographics now in China that the population growth is starting to roll over. Well, impossible to have growth in the world if China's backing up. because of
If China is contracting?
Yes. That's what I would say. I don't think
So
enough people from Spain and the Middle East can change that.
You mean in terms of global GDP?
In terms of population growth. In other words...
population!
Yeah, population.
The people! The people! Oh, the people.
I want the people to rise up now.
Oh, the people.
Please.
People!
Oh, I love people.
Yeah, well, actually, it's
So,
interesting. I was writing my chapter on population in The Real Economist. I was working on that. And did you know that there are 29 countries that are expected to have their population halved by the end of the 21st century? And that includes China.
What?
China's population is expected to be halved.
And there's a real movement in the world that are, by some of the elites that are saying that the population needs to come down or else we're doomed.
Well, then you got Elon Musk out there in the ranching business with his 5 offspring, and he's saying that he's done his part. He's having more kids. Everybody needs to have more kids. We need more people. Like how much
you get it's polarization.
Polarization.
Yeah.
And here's the interesting thing is like all these scientists are now chaining themselves to the buildings at Shell and Exxon. And meanwhile, do you know how much pollution is going into the Antarctic zone because of scientists going there to do research to find out how the world is changing climatically? And now, isn't that remarkable? So this is the problem we have. We hypocrisize ourselves on a daily basis.
It's like when they all fly to Davos in their private jets.
Yeah, exactly. To the global what was that climate?
Well, one of those, but there's several of those worldwide. Things.
The big conference of the parties. Like this is a climate change thing, but they call it conference of the parties. So basically, they all go there and party.
Partiers.
They're at the conference of partiers.
Drug of choices. Well, certainly it isn't water.
And I bet you it's not fentanyl.
Well,
I bet you in fact, I bet you some of those guys are packing fentanyl test kits for their, what they're really up to,
Yeah. So we're seeing some interesting movements, like lots of volatility.
Lots of bowel movements.
I'm really interested in what's going to happen with the wheat thing in the Ukraine. Because wheat is such a...
ecologically, the planted ground that has been lost in wheat in the Ukraine due to the war is not going to soon be planted in wheat again, even if the war were to end. So look at 2022, the planting season is upon us, at least in Canada, in Ontario, where we are.
Yes.
In the north, it's maybe a few weeks behind, but if the war doesn't end and they plow those fields by the end of May, there's no wheat.
What?
Wheatless.
No Wheaties?
No Wheaties. No, but that's just it. So
I know that's why I keep my eye on the price of wheat, because we could have a food problem.
And now the Ukrainians are talking about lobbing a few missiles right into the heart of Russia. Give them tit for tat. Really?
You know what? And then you got, Putin's mentioned the nuclear war thing a couple times lately.
But what a daft idea. And now the U.S. is calling bullshit because they're like, no, you're grandstanding. Because where's he going to launch missiles? He's going to launch them into Ukraine? Downwind from him? Like, hello, nuclear fallout does not stay put. And plus their missile fleet is
a lot of Putin's close advisors are being executed daily for all the bad advice they're giving. Because he.
Yeah, well, could you imagine their missile arsenal has got to be 60, 70, 80 years old now? And who's going to want to pull the button on something that's been sitting in the garage for 8 years?
Specifically said retaliation by Moscow would be lightning fast. He used the word lightning. I'm not making it up here.
Well, his idea of lightning fast is certainly different than ours.
And he showed a picture of one of those old things falling over.
Yeah.
Like an old...
Anyways, keeping on. Here's the Canada housing starts. Now, here's the interesting thing. Let's first look at the 30-year mortgage rate in the United States. As you can see,
what is it, 5 1/4?
5.11.
Okay, backed off a tad.
Backed off a little bit, a smidge. But still, since our last show, this arrow now goes up like that.
Yeah, I know. Yeah.
So this year, This air is a 45-degree angle now, give or take.
Give or take.
Give or take. And if it goes the other side of that, that's definitely a steepening of the incline, which in physics implies a continuation of the steepening.
Yeah, well, but until there's a blow off. But look.
Until the inertia or the velocity and the inertia can no longer maintain the momentum.
We've come a long way in a very short period of time. In fact, you know, we've been doing
this. You came all the way from Toronto today.
But we talk about, you know, what's going on. Remember when rates started to move and we were pay attention.
Okay, no, but here's the interesting thing. So despite this increase in the 30-year mortgage rate, and I'd
like to see the open close. I don't, you know, you just got.
This is not a daily traded number. This is a specified number from average. It's an average in the United States. It's a data point issued by the Federal Reserve.
Sure.
So it's not a daily market.
Okay.
But here's my question. With interest rates rising like this, here are private housing starts in the U.S. Why are they still going up?
Well, I think, you know,
look at this.
Because people plan to do things. And there's a little bit of a lag. In other words,
so you're saying there's latency in the effect of rising interest rates.
Say, a guy says, "I'm gonna build so many houses over the next 6 months."
So you're saying
rates are going up, and he's going, "Holy shit! I've committed to this. I really don't want to do it anymore."
So you're saying there's latency in the effect of inflationary rates.
Yes, of course.
On the housing starts. So what point will we see this curve?
You've pretty well saw it. Now it's.
Well, look at this. It's a little evening out here.
Yeah, a little bit.
So what? Okay, so let's put an arrow in here because we want to start. We want to start verifying our prediction.
Well, you're starting to see the numbers now. Although Facebook did come out after 2 bad quarters, it came out with a pretty good quarter, and the stock's up. You know, but where are they going to go? Is it all going to go back to where it was? It can't.
Well, okay. So here's housing starts. This is April 2020. So this was the gloom and doom of the worst of the pandemic. Before everybody's vaccinated and everybody just sort of froze.
Yeah.
So I'm going to put my arrow here.
Well, yeah, you know.
Okay, there's the trend that we're predicting.
I don't know if it's that sharp. I think it's going to be more of a...
Okay, there's the trend that I'm predicting.
Yeah, that's better. You know, the Fed may be very close now to changing their approach here because if things start to slow down too quickly...
See, here's where I think this arrow is going.
Yeah, well, I think so. I just don't know if it's going to happen that fast.
Well,
we'll see.
I'm kind of surprised. So housing starts are still rising because there's so much money that was already allocated to that investment.
Yes.
And so they haven't sold those houses yet. So people haven't had to go get a mortgage to buy them yet. So when people go to get a mortgage and see that, oh, it's no longer 3%, it's 5%, if you've got a credit score above 720, then maybe that's where, and there's no more fixed rate mortgages, it's all variable rate.
Really?
Well, who's going to lock into a fixed mortgage? What institution is going to sell you a fixed mortgage?
No, you can get a fixed. Yeah, I think you can get a fixed.
Yeah, but
they can match it up.
You think?
They'll take the money something and go and buy something.
But it's going to be full of covenants that get them out of there. You don't think so?
I don't know. I don't know. You know what? And I'm not in a position to give a shit.
Here's the PHLX housing sector index. It's starting to look a little shaky in there.
Philly.
Yeah.
PHLX, Philly. Yeah.
But there you have that.
Well, there you go.
There you go.
That's... No, things have changed. I mean, the worst month for NASDAQ in 14 years.
Yeah.
Like, what? Why? Why now? Well, because rates have gone from down way... I mean... You know, I think the full effect of since the last 2 years, the full effect for the last 2 years is about almost the $10 trillion being created. Some crazy number.
Okay, well, our next guest is Seth Goldstein. He's the equity strategist and chairman of the Electric Vehicle Committee of Morningstar Research Services, and he's going to tell us all about their top picks in the lithium space. Seth Goldstein joins me now. He's the equity strategist and chairman of the Electric Vehicle Committee at Morningstar Research Services. Seth, welcome.
Thanks for having me.
You bet. Seth, your expertise and your observation of the electric vehicle industry appears to be bar none, one of the best. So I'm curious as to, I'm going to start this conversation with this idea that, there are some alternative battery technologies out there that don't contemplate the use of lithium, and that sort of trend is inspired by the rising lithium cost, which is itself a direct outcome of the convergence between a deficiency on the supply side versus an increase on the demand side. So my first part of the question is, do you see those alternative chemistries having any serious role in market share of the future of electric vehicles? And secondly, how is the rising demand versus the not keeping up supply going to affect the price of electric vehicles in the future?
Within the transportation industry, I don't see there being a substitute for lithium, because lithium as the energy storage component is the only metal light enough that can make an EV go far enough that consumers actually want to buy it, and it can be useful for, industrial cases like buses or trucks. When you look outside of transportation, there can be a hodgepodge of different battery storage metals that can be used, energy storage metals. So you can use something like vanadium, you can use something like zinc. These batteries are being studied, and I think they will have a place in the energy storage market, but in transportation, I think it's going to be all lithium. So with lithium prices rising, what has happened is right now, EV prices will start to go up as contracts reset and as lithium producers continue to realize higher prices. But over the long term, I think this will also incentivize a lot of new supply to come online, get a lot of lithium producers financing to build new supply. And over the long term, I think the market will balance. But, at least until the middle, if not end of the decade right now, I expect lithium will be undersupplied and lithium prices to be well above the marginal cost of production.
The commodity price for lithium as expressed in the futures contracts is quite a bit higher by like a factor of 4 of the actual contract price that manufacturers of anodes, cathodes, electric vehicles, etc., are actually paying for delivery of lithium. That sort of spread is, $20,000 per ton in the real world versus $80,000 per ton in the futures world. How soon are those prices going to narrow? Is that gap going to come down in your view?
I think over the next several years, you will see prices converge. You will see contract prices rise. I wouldn't be surprised if spot prices continue to fall. I believe this Monday, spot prices were reported to fall slightly in the carbonate market. And so I wouldn't be surprised if eventually those two converge. We've seen this happen before. We've seen in 2018, I believe spot prices started to fall, but actually a company like SQM, when they reported their prices each quarter, reported rising prices. So, we've seen this divergence occur before. I would expect it to occur again in sort of a convergence at more of a midpoint for both companies, or both prices.
And so I guess that in part drives Elon Musk's recent sort of Twitter musings that he is looking at entering the lithium mining and refining market. He's already made an investment in nickel production, and so we see him sort of moving in that direction. Where are the big opportunities where Elon Musk might be able to take on the kind of size of supply that he would demand as he expands the Tesla consumption?
If Tesla ultimately wants to get into owning lithium resources, I think they'd have to acquire a company. The company really doesn't have any mining expertise, any geological expertise. They could spend years trying to build and develop a project on their own, or they could go out and buy an existing producer or a company that's developing projects. Now, Tesla's going to need a lot of lithium. So even if they do make an acquisition, I'm not sure they would account for 100% of their lithium needs, but it at least would give them their own internal supply, so they would have a lower average realized cost of lithium. But I would expect if Tesla's serious and this isn't just a negotiating tactic to try to get lower prices out of lithium producers, I would expect them to either buy an existing company, potentially like a Livent, or I know there's been some rumors in the market of Tesla being interested in a larger company like an Albemarle, or they could buy a junior producer that's not yet producing but has big resources. Someone like a Lithium Americas potentially, who with their 3 projects, that would be enough to supply most, if not all, of Tesla's production. But they would still have to, after buying the company, then develop the projects and get them to production.
Sure. Lithium Americas is a company that we've been tracking as well, largely thanks to your coverage. And you view, in your research, you stated that Lithium Americas is the most undervalued producer in your coverage universe. And what are the features that make it so undervalued and an opportunity for both investors and possibly an Elon Musk?
Well, the reason I view Lithium Americas as the most undervalued lithium producer on my name right now is because there's still a lot of uncertainty regarding their production. As a company that's not yet producing, that carries extra project-specific risk. There's also a risk with Nevada that they ultimately do not get Thacker Pass approved, or there's further delays due to the environmental activist lawsuit. I think given the favorable U.S. presidential administration views on building out an EV supply chain, I think that they will ultimately prove successful and be able to retain their U.S. EPA approval to get the project into construction and advance and ultimately ramp up production. But there is a lot of risk there. I also see a lot of longer-term volume opportunity for Lithium Americas beyond what they've announced in their phase 1 or phase 2. And this is at both Caucharí and Thacker Pass. So, I think if you're just looking at Lithium Americas and valuing it based on even just the initial volumes that management has guided to, you're going to come up with a valuation that's much lower. But if you look at the 2 giant resources where they will be operating, the Caucharí-Olaroz Basin in Argentina, and you look at the Thacker Pass resource, this has the opportunity to scale much further beyond the phase 1 and phase 2 capacity, leading to higher long-term volumes and higher profit growth than what the market's currently implying.
So then what about the other battery ingredient inputs, cobalt, manganese, nickel? Are those threatening to drive the price of EVs up as well in the near term?
They are. There is an undersupply of many of the battery raw materials right now. And I think that's why we're seeing many EV makers look at having 2 different types of battery chemistries. Many EV makers are copying Tesla's route of looking at having a high nickel-based battery for many of their long-range EVs, and then offering an LFP battery chemistry where iron and phosphate is a lot more readily available supply as a way to have a battery for a lower-range vehicle. So I think you're going to see, many automakers go with that strategy as a way to diversify their raw materials need and reduce demand for products such as nickel, manganese, and cobalt.
And also we've seen that both CATL and LG Chem are partnering with automotive groups to build battery supply in North America. Is that going to be a catalyst to the upside for Tesla in that it might make batteries more cheaply available, or will Musk's intention to have an everything under one roof approach and therefore go it alone on the battery side, is that going to sort of catalyze a negative for Tesla?
I think when the automakers are wanting to build their own factories, it's so that they can make customized batteries for their specific vehicles. Very much the same way Tesla partnered with Panasonic to make their own vehicles, and also has partnered with LG and CATL. So I think it's just automakers really taking a step upstream and looking at what do we need to be able to mass produce EVs. The biggest component that they have to change is the battery. So it makes sense to have a joint venture with the battery makers to be able to mass produce customized batteries and be able to easily change that and not have to rely on a battery maker to go back and forth with designs, or, they can help run the plant, have a greater say on meeting manufacturing targets and that type of thing to increase their own EV fleet. So I don't think it really has anything to do with Tesla. I think Tesla will continue do go on their own or partner with battery makers, which is kind of what's being copied around the industry. So I just expect this to be how this industry will evolve over time, where it's not just the automakers contracting with suppliers, it's the automakers working together to form joint ventures with their suppliers, especially for key components like a battery.
So I guess that drives the logic behind the idea that Tesla could buy a Lithium Americas if they wanted to get into that side, because they need to secure supply.
I think securing supply is going to be one of the biggest challenges for an automakers, especially in lithium. And if automakers are serious about wanting to ramp up their battery electric vehicles and, meet the targets that they've been stating in recent investor days and, when making public statements, then they need to move further upstream. It's not enough just to have your battery and your powertrain in place. You need to secure the raw materials, because lithium is in shortage. And to your point, with demand outpacing new supply, at least over the next several years, that would lead to production delays or, underutilized capacity and weigh on profitability of all these new battery investments that the automakers are making.
All right, Seth Goldstein, that was great input. I appreciate your time today. We'll come back to you in the future. Thanks for your time.
Thank you.
You bet. Bye for now. So here's the trading action in Lithium Americas. As you can see, it rode the wave up to 82,000 and then came right back off. Now, I got to think that a company as liquid as Lithium Americas is probably seeing a lot of speculative trading. Being on the NYSE, probably a lot of short activity. If we go to the commodities list here again, why has the lithium commodity price, there it is, $82. It's leveled off. So maybe this is why Lithium Americas is backed off, is because the rising, this incline has leveled off here.
Yeah.
So why has the price leveled off? Well, I guess there's a expectation.
Maybe demand and supply have equaled out a bit.
Well, did you see that McKinsey report that came out and said that they expect the response from the supply side to be meaningful, though maybe not sufficient to address the rising demand, but they didn't anticipate the price rising above $20,000 in the actual contract market. So this is the thing about the futures market, is speculation will carry the futures price of the commodity far higher than the prices actually paid for under contract in the industrial metals consumption segment. So this is again an example of how poorly regulated futures markets are, and why it's really a casino where the rules can change while you're sitting at the table, and you've really got to be careful in there, which is why we never recommend participating in the futures market.
Yeah.
Even though, we could have made a call here and said, yeah, go wait in there, buy all them futures up.
Yeah.
And do you think these guys are delivering lithium at $82,000 per ton?
Well, I don't know how it works at the.
Well, I'll tell you how it works. If they don't have the lithium, they can roll over the contract for another 3 months by paying an additional fee, as long as somebody will take the contract.
But that means that person's got to do it then.
Not necessarily. Not if the counterparty and the originating party, are in fact the same company.
People want their lithium. That's why they bought it.
Right, but there's no lithium. There's no requirement in the futures market to deliver physical lithium.
Yeah, I don't know. You know what? It's all bullshit. It's always been bullshit. I like the one where it says 1% that control the world try to get the other 4%.
Oh yeah.
From keeping the next 5% from waking up the 90% that are sleeping.
Right.
And it kind of is that way. When you look at what Putin does. Look at what these jackasses do. Mm-hmm. That Biden's son's supposed to be involved in a big way in Ukraine in terms of natural. It's just too coincidental. Why the Ukraine?
Yeah.
Why
indeed?
Why Biden's son?
Look at the price of gold here, though. This is the thing that I don't understand.
Okay,
why is the price of gold coming off?
That's about a 3-year.
Well, that's since February, 3 month.
Okay, let's put up a 5 year or something.
5 years. There you go.
Okay. So look. So big move, big breakout. We ran up here. We're digesting a move, and now we ran up. We didn't get quite as high. Is it a double top, or are we just moving out more and more to the right before we resume an upward trend. And that's what I think's happening. Because it's virtually only 10% off the high. I like gold here because no one's talking about it.
Yeah. Yeah. Last
be
chart
careful.
we're going to look at today is our holding Voxtur, VXTR. And the reason, now Voxtur is no longer a client, and we have achieved our option, which is at $1.15. So we are in the money, honey, ever so slightly. But, you know, the stock ran up here to $1.70.
Yeah.
And has backed off in the weakness of markets generally over the last
But this trend is now
broken.
now going, at least it looks like now this is the trend this way.
Yeah.
And now it's very close to
Yeah. So where's this stock going?
probably test the highs.
There's the direction that this is going. So this is the thing. They're going to be coming out with earnings soon, and the breakaway quarter, the breakout quarter that management has always been pointing to as the breakout quarter is Q1 2022, which will be reported in May.
Okay.
So we'll see what happens. But
Okay.
this stock could start to do some amazing things. I urge you to keep your eye on it. Again, we're conflicted.
You know,
biased. We own
it
shares.
broke out and it's pulled back dramatically. This is where if you really believed in this story and you really thought this is going to be something in 2 or 3 years, this is where you'd accumulate it.
Yeah,
right here,
absolutely.
right here, right now. You take a position.
Here, right now, there is no other place I'd rather be.
Yeah. Okay.
Did I mess that up or what?
Yeah.
Anyways, there's our show for the week. Anyways, thanks for watching. We'll see you next week. Woo!